Welcome back. Shriram Finance reported a strong set of Q2 earnings, and I don't have to say anything. Let's just play out the stock for you, up 8.1% at this point in time. So clearly it is stunned with the rise in the net interest margin as well as the increase in the net interest income. Asset quality also has improved. The company has raised their assets under management growth guidance from 18 to 20%. They were earlier speaking about 15%. So for all details, Umesh Revankar, Executive Vice Chairman of Shriram Finance, joins us. Good morning, Mr. Revankar. Well, the market has given you a huge thumbs up. Before I ask you about your guidance, first, what went so right? What accounted for this very good growth in the NII in the quarter gone by?
Yeah, thank you. I think the major contribution is the merger benefit that is playing in. The synergy of having multi-product and ability to cross-sell multi-product is helping us in increasing our net interest margin. The product mix is slowly undergoing a change. The high-yielding products are being able to distribute well across the country. So that is the advantage. Plus, we also have reduced the liquidity buffer, which we used to have earlier for 6 months. Over the period has brought down from 6 to 5 months to 4 months to 3 months. So to that extent, it has helped us in our net interest margin expansion.
Which exactly are the high margin products that you could better sell and cross-sell?
The gold loan is the one product which we have taken in the first as a product to cross-sell across the branches. Next is the PL, personal loan, and of course to the MSME. All three, we are able to do it. Plus the passenger vehicle proportion has increased. There is a strong demand for passenger vehicle in the tier 2 and 3 towns, and that has really helped us.
Okay. Even as you were speaking, we have pictures of the Prime Minister entering the India Mobile Congress 2023, a very important event. We will eventually cut to the Prime Minister when he speaks, but important because the launch of 5G was last year, and it's about a record-breaking improvement that we have seen, but we should be getting those pictures shortly. Okay, Mr. Revankar, to come back. Now, one of the things that's even your CV growth has been very impressive at a 12.2%, but passenger vehicles, as you point out, it's a 32% year-on-year growth. Now, do you think that in the coming quarter, in the second half, it can be as good? There is a bit of a fear that the government may not spend so much on capex.
I do believe the capex spend will continue because GST collection is good. As long as GST collection is good, the government will continue to, because completion of project also will be helping the government to talk about its performance. So they would be interested in showcasing the completion of the infra projects. So I don't really think there will be a less spend. However, the additional spend that goes into rural also would help us in the rural demand.
Okay. Oh, yes, of course. That's what is expected. In case capex is reduced, there will be more spending on rural incomes. But what is the basis of your increasing your AUM from 15 to 18 to 20%?
Basically, I feel the 15% guidance was given as business as usual, but now the economy is doing well. The GDP growth of 7.8 in the first quarter and overall expectation of GDP growth of more than 6.5 for the full year is definitely helping us. And we are also seeing private capex coming in, and there are some activities that is in addition to government spend, that is really helping us. So the demand is quite good, especially the consumer demand is quite good. That's helping the logistics movement, overall movement of the vehicles and the SME activity. It looks quite good, and next 2 quarters, it looks quite comfortable for us to grow at 20%.
Okay. What do you expect the cost of funds to be? After all, in the GSEC market, we are seeing yields rising, probably pushed by global events. But you don't expect your cost of funds to rise?
There would be a marginal increase. We expect around 10 basis point increase in the incremental cost of fund. On the balance sheet, it may not have a big impact.
You will be able to pass it on, though?
We should be able to pass it on because, yeah, we are in a niche segment. We'll be able to pass it on. So we'll not have pressure on NIMs because of that.
Okay, so the margins are expected to be better than this 8.5 that you have posted?
Yes, we did give a guidance of 8.5, and that should continue to remain at that level, or maybe a little better.
Oh, maybe a little better because you have said 8.5 to 9. That'll be encouraging. Your cost to income also has been guided lower. What is the basis for that?
Cost to income is at 26 now. We are expecting at the same level. I don't really see immediate change in that for this financial year. Maybe as we grow faster in the next financial year, we will have some OPEX advantage, but we don't want to play it now. Maybe next year, as and when we reach there, we'll see it again.
Do you all make an analysis of how much of your business comes because of government capex and how much because of private capex? Is there any analysis you all do on those lines?
We normally don't do, but see, what happens is when government capex is good, it helps in infrastructure and especially for heavy commercial vehicles. Heavy commercial vehicles are dependent on a larger commodity movement like cement, steel, building material. These movements encourage the larger vehicles to ply. And that's where the larger ticket size loan are in demand. So that helps us. And to the extent, I should say, the capex is very important for us. But the consumer demand and the rural demand also is equally important. We are much bigger in the rural than in the urban.
Okay. Oh, of course, that's fair. And now you are even getting bigger with gold and personal loans. What is your expectation in terms of the personal loans itself? Your high margin business, how much do you expect it to rise?
We are focused on giving to our existing customers. We don't really give personal loan to the market customer. Our existing two-wheeler gold loan or customers, if at all they want some additional loan, and most of them are businessmen or individual or self-employed, and it doesn't go in for consumption. It goes into for their business as a working capital or as a short-term term loan. So it is, since it is within the customer base, it may not go beyond 5% of our portfolio.
All right. Just a final one. I mean, the reason why I asked you is Reserve Bank has been constantly warning about unsecured debt. In your own case, any extra efforts you are taking, any worries about unsecured debt? Because you are going big on personal loan.
See, we are not actually going big on personal loan. We are selling it to our existing customer who has a track record with us. In that sense, it is not unsecured because we know the customer well and it is not sold to unknown customers.
Okay. Fine. That I'm sure that will be music to Reserve Bank's ears as well. Thank you very much, Mr. Revankar, for spending time with us and best of luck for the current quarter as well. One hopes it's as good as the one that just went by. The market clearly extremely excited by the performance of Shriram Finance itself. And after the interview, actually, the stock has gone up from 8.1. It's now 8.6% higher. In fact, generally, the NBFC sector has done very well. And more importantly, the mid-caps have really picked up after 2 or 3 days of severe battering, up 1.5%. Good morning for the stock markets, one of the best performing markets in Asia itself. We wrap up on Bazaar on that optimistic note. Stay tuned. Chartbusters will take the action for.